We want to turn to the panel now, and Myles Udland, Yahoo Finance's own Myles Udland, joining us now. Hey. Myles, how do you react to all this? Because we've been watching, it sure hasn't helped stocks in the last 45 minutes.
I mean, I never thought the Fed should cut rates. I don't really think it's within their mandate. I think the case for cutting rates was pretty weak. I mean, if we're talking about, the Fed needs to help people refinance their debt, that's not the situation here, right? We're talking, if coronavirus effects are what people fear they're going to be, we're going to need individuals and businesses getting bailed out. They're going to need to go to a bank to say, okay, you don't have to pay this money for 90 days, 180 days. Maybe this is a symbolic move to the banking system that gets financial institutions to think that way. But if we are to take the coronavirus fears to their furthest endpoint, that's what we're talking about. We're talking about a freezing of economic activity. And while Powell's reiterating our toolkit is we can cut rates or we can do QE, and he kind of dodged the QE question, which I think Brendan Greeley was trying to get him to answer. But they're like, okay, so we can cut rates. I'm not really sure what it accomplishes, and I think that the market's read right now is frankly do they know something that we don't know?
Right.
And now, again, the Fed was reacting to what the futures market told it to do, right? We saw Fed funds futures price in a rate cut 3 days ago. So on that basis, the Fed has literally never disappointed Fed funds futures. So here they are doing what the market told them to do. But I think the case for a cut was fairly weak. I think the case for a cut remains fairly weak. But I think Powell has shown a big sensitivity to the stock market, and so he based it, kind of moved on that basis.
Well, and we did see a report of Stephen Mnuchin talking about helping small businesses. I mean, you mentioned businesses needing to be bailed out. Yeah. That's sort of a separate issue from the Fed cut, but that is where the conversation is already moving.
There's also an interesting theory being floated by Mike Antonelli of R.W. Baird, who's a frequent guest on our programming, who points out that, yes, we're seeing a negative reaction today, but perhaps that's because at least some of the huge upside we saw yesterday was in anticipation of perhaps some sort of rate cut. It's not out of the question that there was at the very least speculation and at most potential leaking happening on that front.
I think to that point, and I should have pulled the tweet up in front of me. Someone yesterday on my feed tweeted out the stock market's performance from September 08 through the end of the year. Every day the market moved 2-3% up, down. I mean, we had 9% down days, 7% up days. Every day, all hell was breaking loose. The last time the Fed acted like this was then. And so I think, to Mike's point, and I know what he's saying, and, I think there's a lot of that kind of, what does the market know out there? But clearly the market itself, the stock market, is unmoored. There's nothing to go off of, where there's no sense of why the market should or shouldn't be up or down 5%.
Yields are down now.
I mean, this is a market that has really no basis for acting one way or another, which means I think we're going to keep seeing 2-3% up and down days, and read into that what you will. But clearly, there's just kind of there's no narrative here.
Go ahead, Brian. I was going to say, what does the market know? Something really interesting from Jay Powell's speech, and I don't know if I'm reading into this too much, but he said, we will get to the other side of this. I do expect we will return to solid growth and a solid labor market as well. And I don't know if that was a Freudian slip, but the word return was kind of curious to me. I didn't think that we were seeing material impacts from the coronavirus on jobs reports or anything else in the data for that matter. Look at the ISM number that we got this week. So I think that that's something that kind of shows that the Fed is super worried that they will see a downturn in the data real soon, which is why maybe they justified the 50 basis point rate cut as opposed to maybe just issuing guidance saying, offer a little bit more, leniency in your delinquency of your loans to the financial institutions.
Well, and the thing is, Brian, the way the Fed is communicating always is around their base case, right? They're always nibbling on the edges of their base case. But I think a lot of that line stands out to a lot of people because Powell is essentially saying, this is just, we're going to fix this, and then it's going to be fine. This is just a blip, and then it's going to be fine. But I think this action shows that the base case is off the table. Right? They realistically don't see any base case economic outcomes for 2020. We could get a 5% fourth quarter GDP print as a bounce back. We could get a negative 3% second quarter print because of coronavirus. There is no base case anymore. And so
no one knows anything.
For him to go back to that language, I think is still, to me, indicates that he and the Fed are not really sure what they're trying to do here.
And Powell,
you got it right when you said the stock market is unmoored. And I think one reason the market is unmoored is the Fed is not the institution that can fix this problem. Yep. What is going to move markets on coronavirus coronavirus, at the end of the day, is the public health apparatus. And the market has no read on that. I mean, the market does not know how to evaluate the effectiveness of the public health system in the United States, and frankly, nobody does.
And Powell said that.
A lot of he did. He said, he basically said, we're not the only game in town.
Is up to
we're doing what we can, but this relies on.
You could sense the humility and the concern, because he said, we don't think we have all the answers, was the exact language that he used. So I hadn't heard a Fed chair go up on a stage and say that before.
The market right now is looking at the things that it understands, which is Fed policy. But what's driving the market is things the market does not understand, which is illness. I mean, and how far is this going to is this going to go? And this is I keep calling this a known unknown, to borrow from Donald
Mostly
Rumsfeld.
unknown.
We know that it's a problem. We just don't know how big of a problem, and it's going to take probably months before.
I mean, to think about the health side of it, right? Like, I was talking to my parents yesterday, like, oh, coronavirus, and I was like, look, maybe I'm imagining it, but Subway seemed more empty yesterday, right? And then today we come in, and now there's someone sick in Westchester County, and like, we know that these things are going to happen. Every day is going to bring more cases and more school closures, and all of a sudden it's going to be like, all right, now it's all stopping.